I'm Matt Bichard with REIT.com here in New York City for REITWeek 2014 NAREIT's Investor Forum. Joining me is Ritson Ferguson, the CEO, CIO of CBRE Clarion Securities. Ritson, thanks for joining us.
Glad to be here.
Now, have any sectors surprised you so far this year in terms of how they've performed?
Well, it's been an interesting year so far, and a good year. I mean, even the laggard net lease category is up 10%, so it's kind of hard to find a sector that's bad. But with performance between 10 and 20%, I'd say that probably what surprised me the most is the mall sector performance, up about 16, 17%. And I say surprise, the mall sector, especially the A-quality malls, are very strong. We like those companies. Their ability to generate cash flow growth is quite strong. But I think what surprised me probably is with all the negative perception after the holidays about the growth of internet sales and stuff like that, was that maybe the sentiment hasn't overwhelmed the fundamental story of these stocks to some extent. So I guess I'm heartened to see that the fundamentals still matter and that the stocks have performed, notwithstanding maybe some negative news.
And is there any sector that perhaps investors are underestimating heading into the second half?
Well, again, I think people's attitude towards real estate has improved versus, say, where it was last year. And it's not that it was bad last year, but I think in light of the equity market being up 30%, real estate had kind of fallen by the by and become a bit of a sector that people weren't paying attention to. So I am heartened that people care in general more, but I would say right now the hotel sector to me seems to be the one that's somewhat underappreciated. There's certainly plenty of concern about what the direction of the economy is, but it feels like it's up. It's more a question of how much and how fast as opposed to whether it's going to improve. And I think the hotel sector will benefit maybe most from that, and yet the group of stocks are trading on average at about a 12 times multiple, and to our way of thinking offer very real prospects of growing 15% or so their cash flow both this year and next year, and yet they've been a relative laggard. So I think that's one that people are probably underestimating. By contrast, I'm a little bit concerned about what I see in the net lease space and the healthcare space. Even though I think there are a lot of good operators in those spaces and there are some good fundamentals, I've just watched the quest for consolidation really take on almost a frenzy pitch, and I'm just worried that it's beginning to erode some of the necessary discipline in acquisition programs.
And lastly, shifting to the international landscape, what do you think is going to be the dominant story for the rest of the year on the international landscape?
Yeah, there's a big wide world. The world of listed real estate outside the U.S. is probably 2x. So there are lots of interesting stories there. I'm probably hard-pressed to narrow it down to one, so let me give you two. I think Europe is clearly an area that's captured a lot of investors' attention. A lot of capital is flowing in that direction, both on the private side of real estate and on the listed side. So whether or not the European economy really gets up and off the mat or not, it's for sure that the property sector is hot. And I think the listed companies are coming more into people's radar screen and into the focus. And I think that will ultimately have some good implications, not only in how the existing stocks perform, but I think we're going to see more companies come onto the landscape, and that's always exciting. And that's not just a this year thing. I think that's got many years. The other story, kind of on the opposite side of the world, is China. China's growth is slowing. It's still probably the envy of almost any nation around the world because their version of slow is really fast compared to the rest of the world. And yet, when an economy of that scale slows from 10 to 8 to maybe now 6 or 7, it has implications. And particularly for the other countries and the property companies within those countries, that has implication. And what's interesting to me is real estate has been at the heart of a lot of what's been helping the Chinese economy expand. And yet you've got a central government that has maybe learned the lesson from watching housing bubbles burst here and others, and is very determined to try and keep the regulation reins on a runaway property sector. So I think how China manages that slowing is going to be a fascinating story for the rest of this year and next.
Ritson, thank you so much for joining us today.
Thanks for having me.
For more on this and other news and information, be sure to visit REIT.com.